Hello, everyone, and welcome. I'm Peter Krauth, editor of Silver Stock Investor, a silver-focused investment newsletter that covers everything from larger silver producers and ETFs all the way to junior silver explorers. And today I'd like to make the case for investing in silver and silver stocks. If we look at mine supply for silver over the last 5 years or so, we see a steady decline. That's been the case since 2015. It has been declining, in fact, each and every year steadily since then. None of the top 10 silver producing countries has escaped this trend, not even some of the larger ones like Mexico, Peru, or China. And it's certainly a trend that we see likely to continue over the next several years. Under 30% of silver produced every year, mined every year, comes from primary silver mines. That means that most of the silver that's mined comes as a byproduct of gold, lead, zinc, or copper. So when silver prices rise, those miners regard their silver production as such a small portion of revenue that they often don't or won't react to higher silver prices, which helps, in fact, sometimes to feed even higher prices as supply is unable to meet growing demand. Comparing silver to gold, we know that both are monetary metals, but silver is considered much more of an industrial metal compared to gold. About 50% of silver's demand is on the industrial side. That includes things like solar and EVs, electric vehicles. And increasingly, a lot of silver demand has been coming from the investment side of demand, things like ETFs, coins, and bars. In fact, we are in the last several months and the past year or so seeing historically high demand for silver. Vehicle demand has been up tremendously. Things like internal combustion engines have required typically anywhere from 15 to 28 grams. But with the rise in electric vehicles, which require anywhere from 25 to 50 grams, which is essentially double the consumption in an internal combustion engine vehicle, certainly the demand for silver for the auto industry is likely to rise considerably over the next several years. The Silver Institute estimates that silver demand will be up by about 50% over just the next 5 years, from about 60 million ounces annually to about 90 million ounces annually. Solar panels, we expect, will also see strong growth. They are the largest industrial application for silver. They require about 100 million ounces every year. The average solar panel requires about 20 grams per unit. That unit consumption has been falling as manufacturers look to increase the efficiencies and cut costs. But the worldwide growth of production and installation of solar panels, we expect, will certainly make up for any efficiencies in consumption for manufacturing of solar panels. And as I said earlier, silver investment has been certainly the wild card. We see that aspect of things exploding. It's been increasing steadily since 2015. Last year was an outsized year for silver ETF and coins and bars. And in the first couple of months of this year, certainly in part because of these whole Wall Street bets and silver squeeze movement, a huge amount of silver has been purchased. We've seen global ETF holdings of silver up massively, currently sitting around 1.2 billion ounces in early February, which is a full 20% above the entire year's supply of silver. And the outlook for silver this year certainly is very bullish. We expect that physical silver and gold will continue to be widely in demand and sold out. We've seen bullion dealers having an extremely difficult time meeting requests for deliveries. premiums are up anywhere from 40 to 50% above the spot price, which is typical of your average premiums on physical silver. And we're at a point now where we've seen that the silver price for the price for physical silver has detached from the spot and futures prices. And certainly I believe that this discrepancy is going to be resolved with with spot and futures prices having to climb to reach anywhere close to what the current physical silver prices are. That's why my target this year for silver is for it to reach about $37 per ounce. An important gauge to compare and to see where silver stands in its overall bull market is where the gold-silver ratio stands. That's a simple ratio where we calculate by dividing the gold price over the silver price, and that tells us how many ounces of silver are required to buy 1 ounce of gold. That ratio peaked in March of last year at the most crucial point when the world realized we would start to lock down and shut down on the back of a global pandemic. Ever since then, the ratio has been falling. It fell steadily from 125 last March. We're currently sitting at about 66, 68. I believe that's heading down to more of a longer term average of about 55. And if we use a $2,000 gold price and a 55 gold to silver ratio, that again implies a $37 silver price, which is 48% above silver's current price of around $25 per ounce. Interestingly, silver always outperforms gold in bull markets. If we look at the 1970s market, silver on a percentage basis easily outpaced gold with a much higher peak. Again, in 2011, silver considerably outpaced the gold price with its peak around $50. And if we look at where both of those metals prices currently sit, even with gold having reached an all-time nominal high of over $2,000 in August and silver near $30 around the same time, that certainly indicates that silver has a lot of catching up to do and a lot of tremendous upside from this point. Silver stocks can provide huge leverage to the price of silver. This is one view of early 2016 when silver started out strong out of the gates at the start of the year. Within about 6 or 7 months, silver was up 48%. And if we look at the average silver price by looking at the SIL ETF, which is a grouping of larger silver stocks, that ETF over that same time frame was up 240%, or 5 times what the silver price had generated. More recently, since last March, silver stocks are up about 127% to date, and gold stocks are up about 73%. So we certainly see that silver stocks have been outpacing gold stocks. That started in about June or July, and that outpacing has continued since then, and certainly leads us to expect that trend to continue. If we look at previous bull markets for silver in the 1970s, and this is just the price of silver itself, not even the silver stocks, which of course tend to leverage silver by a multiple. Silver itself was up 37 times from bottom to top. In the 2001 to 2011 bull market for silver, it was up about 11 times. And so we certainly believe that we're in a renewed bull market for silver and expect very similar, perhaps even better returns than this time around. To recap, Silver Stock Investor is a silver-focused newsletter that covers the full risk spectrum of silver investments, everything from silver ETFs, including large producers, royalties, developers, all the way down to junior silver explorers. It's aimed at new and experienced investors covering everything from low to higher risk stocks. And just an interesting aspect, in particular regarding juniors, what we've seen is that even if the silver price stalls and moves sideways for a while, we can still get some tremendous kicker out of junior silver stocks. To give you an example, there's one stock in the portfolio that over the last 7 weeks is up 47% on outstanding drill results. So thank you for listening to this overview of the outlook for silver. I invite everyone to go to silverstockinvestor.com to get a more information about Silver Stock Investor newsletter. And I encourage everyone to remember silver is in a bull market and there is tremendous upside for both silver and silver stocks straight ahead. Once again, thank you for your time.